Good day. This is the Eye of the Storm podcast with the weekly update for the S&P 500 being recorded on Sunday, June the 30th, 2024. I'm going to start here on the weekly chart with the SPX. So we're looking at the cash market. And first thing you're going to notice is that I have actually labeled Friday's high as the completion point for that minor third wave. So in other words, we went up, we finished minuet wave 5, minute wave 5, minor wave 3. And that does line us up for a minor fourth wave correction. And it kind of comes in to right into this area. But I'm going to do a little bit different today because I'm going to be looking at the weekly chart and then on a technical basis, taking it down to the daily, to the 4-hour, to the hourly. And the reason I'm doing it this way is because I want to show a very clear difference in our technical picture and why we could very likely get a minor fourth wave correction, which, as I have been talking about, will be followed by a minor fifth wave up to complete the intermediate third. So just to kind of begin, and first I want to give a hats off and a thank you for the reminder that this is something that I've been doing all along. But when we become very focused on the futures market, we can become a little bit off base on what our expectations of the market are. So I always try to balance that between the cash market, where I'm actually putting my grounded, what I feel more grounded Elliott count, and then try to bring the futures market up to date. Now, today, or what Daniel did tell us, is to do that. Now, the difference is because this whole move has been going on for months. And so what we've gotten is every, the futures market runs on a cycle. So, and it's right now, we get a, like right now we're trading the, still now we're in the, in the futures basis, we're in the September contract. So the June contract. So we had, January, March, June, September, and then December. So this, each time we roll, the prices are disjointed because the futures are always going to have interest. There's interest involved when you're, figuring out what the price of the future is going to be 6 months out or 5 months, 3 months out, etc. So there's always going to be a premium in the future. And that drove the futures prices up above 5,500 pretty quickly when we rolled from June to September. Now, the cash market, of course, doesn't roll, so its price is constant. So that's why I will always go to the cash market when I'm really trying to work out where are we in this scheme. Now, as you know, I've been working on just counting up the final stages of the minute fifth wave, and within that, the minuet fifth wave, to complete our minor third wave. I've been discussing how we're going to have a minor third wave top, a minor fourth wave correction, followed by a minor fifth wave back up to, again, new all-time highs. That will then complete the intermediate third wave, which is still all a part of this. So we're progressing, right? We have the minor 4, then we have a minor 5. That'll complete intermediate 3. We come back down in intermediate wave 4, go back up in an intermediate wave 5. Then we're getting that completion point for primary wave 5. And then we have a much, in my opinion, a much larger cycle degree. We'll be reaching a cycle degree third, and then we have that cycle fourth wave correction. And that one will be more involved, let's say, than what we're seeing now. These are still going to be extremely tradable, but I think people are going to be wondering, well, how do we still get, when we're looking at in our longer term charts, why is it still, a strong buy or a buy? So again, we're going to start there. We're on our weekly chart. Now I'm putting up that we have completed minor wave 3. That sets us up for a minor fourth wave correction. And as I've been talking about, the initial indicator for where we can drop to is going to be the price territory of the fourth wave of one lesser degree, right? So it's minute, then minor. So coming back down, the minute degree, and here's that fourth wave right here. So we have the potential now to return and touch back down at the April lows. Well, we just finished June. So basically the April lows, well, that's just really 3 months ago. That's not all that bad. So now let's take it back to that weekly picture. So what keeps this in terms of moving averages and technical indicators, what keeps us much in line? Well, the RSI, now this is interesting because the RSI, we made a new all-time high again, but the RSI shows divergence. That is one thing that goes against the fact that, okay, we're going to drop. But to consider what the RSI what would have to move to actually push on a weekly basis the S&P 500 into a sell is quite a large move. But we're still, now you see, we've got the divergence going. So a corrective phase is very possible. If in fact, it's very probable as well. Now, we're coming off of an overbought reading via the RSI. We look at the MACD. I've included that here too. The MACD is still actually signaling on our longer term charts, it's still a buy. Not as strong, but still a buy. When we combine all of our technical indicators together, your summary is going to be that it's still a strong buy. So if you're long or you were looking to get long, you're going to want to add to a position or just start to build a position as this correction pulls off. Now, you can work this down and still look at the other charts to figure out, okay, where are we in this? Do I start buying now? Up here? I was like, likely not. If you're already long, the indicators are basically telling you there's still upside to come. And we know that via even the Elliott count that we're looking for a fourth wave to be followed by a fifth wave up to new highs again. And that'll be followed by another fourth wave with another fifth wave up to additional new highs. So again, on a little bit longer term, we've heard now, we've got indicators, we've got people talking about 6,000, 6,200, and that remains in our picture. That's not so far out of what we can expect here. So right now, I need to just leave the fibs together for what's going to come in terms of our corrective process. So what we're going to look for is ABC down. More than likely, now, as I've talked before, and I'll discuss that when I get down to the hourly, what I look for when a top is put in, the market would usually, on a reverse, will reverse down if we're coming off of a high, will reverse down in 5 waves. Now, in terms of where that would put us within this correction, 5 waves down could be, the first leg of the A wave down, right? When we're looking at that, we're really coming off of a high on Friday at 55.23. 55.23, and the market ended up closing at 54.60. So that's, to me, a pretty strong rejection of the high, and possibly that puts that marker in place that was the completion point for our minor third and those minuet fifth and the minute fifth. Now, what we also can do now on the hourly, on our weekly chart, 1, 2, 3, 4, 5. So it truly does kind of fall into place. And even within this, it's 5, and it was 5 up to here. We needed to get above that high. We did. Rejected, came back down. Now you'll see when I'm ready to do the futures market, it didn't. And so it may be a failure, or we have to consider the previous high as the completion point, which I discussed on the daily updates. All right, so now I want to take this down. So right away, here we have our fibs set up. These are just retracements of that third wave on what we can expect. Now, we already have the fourth wave of 1 lesser degree, so we've got that. And look where that all falls in, between 0.236 and 0.382. 0.382 is a normal pullback, a normal corrective level, retracement level for fourth waves. So if we're looking for 48.68 as a possible bottom here, and we're up and we started at 55, well, that's a pretty big drop for us as a trader. Now, if you're a long-term investor, well, you're going to sit this one out, or you may add to a position, or you might throw a put on there, or whatever, to kind of just balance out and let you ride that corrective process out. So depending on your style of trade, are you a long-term trader, a mid-term trader, a day trader, a swing trader, all of those different things? That's why I want to break this down, because there are trades for every level. Okay, so that's the weekly look. Okay, so we have really, I think we come in between 0.236, which is pretty much the minimum, and that's 51.19. Then we have that low from the April expiration, and that is 49.53. And then we have the 3A2, which is the most common. So the fourth wave of 1 lesser degree, that low comes right in between 0.236 and 0.382. So this remains pretty strong. If we start to come off, that this is the area. We'd be looking for it to get down here, and we look for it in an ABC. And that's likely going to be a 5-3-5. Now, also, there's others. Fourth waves are notorious that if the market could hold itself higher. So we get in an A, B, C, D, E, and launch. There's that. So again, we have to take into consideration we're in the absolute beginning. We're now going to follow the wave pattern, or just the structure on our lower time frames, to begin to tell us what form this correction may take. All right, so now I want to bring the chart down to the daily. So from the weekly, we're now down to the daily. And I'm going to actually just also take a look at our technical indicators on the daily. Now, of note, we're coming off, and it's, it was a nice drop. It was a rejection of the high. And you can see that we got in here 1, 2, 3, 4, 5. So we get the 5, clean, nice, and it fits 1, 2, 3, 4. That did not overlap. And then we have the 5, and now we should start down. Here's our level, here's our area. Now, what are we checking out? Excuse me. Our moving averages on the daily. I have the 13, the 20. More importantly now, what we really look at on the daily is the 20 and the 50. So as long as the market remains trading above the 20 and the 50, neither one being broken, the moving average is going to continue to say it's a pretty strong buy. Excuse me again. Now, taking it down, we look at other technical indicators. The relative strength, it's not necessarily super negative. It is indicating, again, here we have that high, then we have a lower high while the market made a new high. So we have divergence in the RSI, but right now, as of the close, it remains in a buy position. Stochastics remain in a buy position. So you can go down the whole realm. On a daily chart, they're not signaling sell yet. Now that obviously is going to change. If indeed we are in this fourth wave, it is going to change. We'll start to break these moving averages on our way down. We'll see the MACD give a sell signal. We'll see the RSI give a sell signal. And that will begin to flip these indicators along with the moving averages to neutral to possible sell. Then we'll be looking for that to be reversed again, but we'll start from our lower levels. So here we can see the internal count more clearly, and I actually don't need to have that MACD on there. So let me just take that off because it gives me more real estate to look at the wave count. So, but I do leave the RSI because that one's important and it is showing divergence. So I am looking for continuation. Now that's the daily chart. Still everything in line, everything looking good. But why? Why the market would continue to show that the S&P 500 is a buy? As of the close, it still sits in a buy position. But we're looking for that to change. And we've seen now how the moving averages have kind of gone from strong buy to, no, they're just a buy. But when they start to break, it's going to flip to neutral, and then it's going to flip to a sell as we continue to move lower in an anticipated fourth wave. Now, so daily, you're not really doing anything yet. Now, and we're moving it down to the 4-hour chart, and we start to get a little bit different look. All right. We have right here where we rallied back up, but we went up, we came down, we sank a little bit further, and then we rallied up into the close. Okay, no problem, not that great. It was about 15 bucks. Let's just put the marker in for that, for the expiration. Now, what about our technical indicators? Well, notice that we have broken below the 20. We came back up and closed just below, so it's still kind of hedging, sitting, maybe, maybe it's moving a little bit more towards neutral. We're staying neutral. You're not adding, you're not selling, you're not doing anything just yet. But a lot of the technical indicators start to switch. This is on the daily. We have the stochastic now throwing out a sell signal. We have the ultimate. We have the rate of the ROC. Those have turned into sells. But the MACD remains a buy. The stochastic, a fast stochastic, is kind of showing oversold. So we might be looking for a little bit of a bounce. And the RSI is still signaling that it's within a buy, even though, because we got to get down to here before we get into a sell. Then it's oversold. But right now, here we have it again. Look at the divergence is even harder on the 4-hour chart. There's the high. There's the lower high, but yet a all-time high in the index divergence goes along with that's the 5, and we're dropping down. What's going to really flip the 4-hour chart if it breaks the 50? I think it'll move very quickly to a sell on a 4-hour basis. Now, again, how do you want to trade that? Again, when we get to that point, we'll be able to look as to where are we within this A wave of 4, and then we'll be able to say, okay, we're looking at additional downside. I'm a swing trader. I'm a day trader. You can put on a position to reflect the move. So that's kind of what I'm talking about when we start breaking it down and we're looking at levels. So in other words, the daily down to the weekly to the daily to the 4-hour to the 1-hour chart. Now the 1-hour chart, look what it did. Not only did it break below the 13 and the 20 being the more important, the 20 is now heading lower. The 50 was broken, and see what happened when it did? It accelerated. So the selling got a little bit more like, okay, we're all getting out. Why? Because that indicator, that moving average as an indicator, flashed sell. Now, our technical indicators on the hourly chart are basically pointing us towards strong sell. So what do we want to interpret this as? Well, here we have that 5, right? So we got all that up there, and that's way up there. I got to get all these. Not sure why, but they just disappear. My labels disappear on my chart when I go down to the hourly chart. I'm not sure why. But that's a 5. Remember, we're looking for the development of 5 waves down on the hourly to give us that confirmation that that high completed the move. And then once that's in, we should be able to count 5 down, and that may be wave A. So what can we kind of just put out as an estimate of possibly what's going on? Well, possibly we kind of get a 1, 2, maybe a 3. or a 1-2. If we bounce back up and we get up to here tomorrow morning, and then we start to slide again, I think a move down to that hourly 200 is pretty much in the cards. But we see that here on the hourly chart, RSI is still not, it's a sell, but not necessarily super strong. But if it starts to break below 30, it's going to push harder. And that may bring us then down to here. And if we get a turn, then we might move a little bit back from a strong sell to just a sell, maybe back up to neutral as we're putting in a B wave. And then again, as we start to drop, again, hourly chart, we flip back over to a sell. So if you're a day trader, you're paying attention to these signals all the way down to like a 15-minute chart. Like I can go from an hourly and I can go down to the 30-minute chart and go down to the 15-minute chart, and they're all saying strong sell. 15-minute chart is everything is strong sell. Moving averages, technical indicators combined is a strong sell. And I'll just drop it down to that 15 minutes so that you can see again cash market. Now you can see, look at that depth. Okay, so what do we have really going on? Is this a 1, 2, 3, 4, 5, 1, 2, 1, 2, 3, 4, and a 5 maybe inside of there? I don't know. Or is that 3, 4, and now we're going to come back down in a 5? Possible. Very possible. Now, I'm only speaking technical right now. I've not added one iota of fundamental, in other words, like what's happening outside of the market. What could possibly upset the market? You know, what numbers come out next week? What are we going to be looking for? And what we have next week in terms of economic reports is, well, first of all, we have the July 4th holidays on Thursday. For those that do not reside in the United States, the U.S. markets will be closed on Thursday, July 4th. And very likely, the market's going to be open on July 5th. That's the Friday. And it's a bigger day because we get the U.S. employment report for June. And we get the employment rate, the hourly wages. And so there's a lot of inflation data that's going to be coming out on Friday, July the 5th. But I think it could be a very light day because I think a lot of traders, it's summer now, right? And it's been a hectic second quarter conclusion and massive moves. And we're still getting a lot of talk in the market about NVIDIA, 160 to 200. This is getting marked up. This is getting, and so that doesn't mean the market's not going to correct first. I actually do agree that NVIDIA's got a lot of good stuff going for it. You know, obviously it's a smart CEO. He's got a, excuse me, he's got a good plan. And he's enacting that plan. They have product they continue to develop and they continue to improve upon. So they're basically just kind of building their forward guidance and what their anticipation is, the participation in the market. What could upset other companies from coming in and buying those chips? Well, they may anyway, but you might see sales slow because the whole economy might slow, because inflation might still be taking a bite, because of other things that may come in. So I'm not including any of that. But next week, what do we start to focus on? We start to focus again. We have on Monday, so tomorrow we have the S&P U.S. manufacturing, the PMI, the final. We have construction spending. We have ISM manufacturing tomorrow, another indicator. Is it improving? Is it not going to improve? Is it showing inflation? Is it not showing inflation? On Tuesday, we have job openings and auto sales. On Wednesday, we have ADP employment. That's been a major factor in terms of what's the market's going to move. We also have initial jobless claims on Wednesday because Thursday is a holiday. We have U.S. trade deficit. We have the S&P U.S. services PMI, the final. We have factory orders and we have ISM services. So next week, we are back to looking at inflation. So last week, we had the conclusion to the second quarter. We had a lot of activity going there. And the numbers were like PCE. They were inflationary data, but now we're getting it via employment and PMIs. So we seem to kind of rotate between which area the economic data focuses on. Next week, it is going to be employment and PMI. Okay, so that's the gist of what that's going to happen. So again, this is just all the way with looking at technical, how I would use the technical, and to how each one of us may be trading. So again, if you're a long-term trader and you're holding positions that you really want to hold until the end of the year, you're not too worried about selling. You're going to have to sit through a correction, but understand that what the market's going to be talking and what you may have to take in is keeping your position safe, and also possibly just maybe doing a couple of things that will lessen any downside blow if you happen to be exposed via the S&P, via an ETF or whatever. But you can look at it in terms of what's happening on that weekly chart. On the monthly chart, there's still a strong buy. I got to tell you, it's still a strong buy. If I'm looking on a monthly basis, across the board, moving averages and technical indicators continue to say strong buy. Why? Well, this is just a minor fourth wave, folks. It's just a minor fourth wave. I'm still looking for a minor fifth wave back up, new all-time highs again. And then still, this monthly will likely remain in a strong buy, or at least a buy, as the market then comes down in an intermediate fourth wave. So we're looking for a minor now, and we're realizing that it could be as much as 500-600 points, S&P, but then back up. Intermediate should be, again, bring us back into almost that same level. So we're coming down to the same territory there. Let me move this back out and let's look at the daily. It's the same territory, right? This is the previous fourth. When we come back, maybe we hold down into here, we put in minor four, we go back up in a minor five, complete an intermediate wave three. Where would we expect intermediate wave four to go? Into the price territory of minor wave four. And we're right now estimating that's likely going to be in the same area. So we're going to rally to new highs, come back down and rally back up before we finish an intermediate fifth wave. We're going to drop in a minor four, go up in a minor fifth, drop in an intermediate four, go back up in an intermediate fifth. So there's still quite a bit of upside. So yes, when you're looking at a monthly or weekly, no, you're not selling yet, right? If you're dropping it down because you're more of a daily swing trader, you're also not really selling yet. Now, if you're going to play for a couple of days or a week or so position like, you want to take into consideration what the 4-hour chart is starting to tell us, what the hourly chart is starting to tell us, and on down. And understand that it's going to be an A, B, C. We're not looking for the end of the world. We're definitely not looking for a crash. I imagine a lot of talk is going to come out. But I'm going to stick to what the wave count's basically telling us right now. Now, I want to go over and look at the S&P, and I know this is more detailed, but I wanted to try to make clear, because I know there's a lot of longer-term traders, and they were getting rather annoyed because in the futures market, I'm constantly readjusting the labeling. And they're saying, well, there's too many possibilities, and the market's going to be all the way down here before I get an opportunity to sell. It depends on what position you're in, what your term is. Are you a long-term trader? Are you a mid-term? Are you near-term, etc.? That is what I'm trying to help, making those decisions. So basically, on a monthly and a weekly, and actually daily, they're still the indicators, and the moving averages are still in a buy. So you would maybe want to add to your position, or you want to stick puts underneath it to kind of absorb some of the downside. The other things, but if we break it down to the 4-hour and the hourly on the S&P is saying strong, sell it, sell it. Why? Because on an hourly chart, it should continue to come down. And once we start to break these moving averages on the daily chart, it's going to flip to neutral or to a sell. So that's kind of the additional information I want to put in. So it just depends on how we look at this market. All right, let's go look at the futures market, because this What a mess. The roll from June to September, what a mess. Just the intraday play with all of this adjusting for the end of the quarter. What a mess. These internal is just, it's very messy. But what I've done, I've put in the same thing. Now you look, there's this high, which was 55.25. Well, then there's this high, which is 55.10. That's 15 bucks shy. Well, guess what? I'm putting it in as a failure, right? So the fifth wave failed to move above the high, the previous here. So this is all internal inside this minuet fifth, because this would be 1, 2, 3, 4, 5, or it's 1, 2, 3, 4, 5. But either way, it didn't break that high. And that was the high that I would have liked to see, like we did in the cash. Cash did, future didn't. So we have a small failure in the future, but it certainly rejected it pretty quickly as well. So we got the same type of signals, right? Now we're looking in the futures market. If it breaks the 20, I know I used the 13, but that's more for really intraday trading. So the 20 is the more important. If this starts to come down and we break the 20 on Monday, or even in Globex at 54.85, we likely will pick up some sell pressure. If and when we break the 50, then we're going to get additional pressure. So where is our support? Here we have it. We starts at 53.93, so basically we'll call it 5,400. That's just above that 50. So what if wave A comes down to here, we get wave B, and then we come down in a C, and we end up inside? That's all very possible. Now, is it that severe of a drop? No, it actually isn't in the bigger pictures. It's just a correction. Minor 4, minor 5, intermediate 4, intermediate 5. That's what we got going on. So support levels, 51.73. What's the potential here? Well, we got 53.92 on the top side, inside, but I think that it goes much lower, but it may not. Maybe a wave, the wave A gets here. And we do a B wave. We have to let this all play out, folks, and be open to the internals. That's really going to be our best bet. And bear in mind what the hourly, what the 30-minute, what are telling us, what the 4-hour chart is telling us in terms of technical and moving averages. What is that telling us? So the daily, again, is kind of still in a buy. Even the 4 hours, pretty much still in a buy. Why? Because it's holding above the moving averages. Here we have, again, that's pretty much this high. Then we don't make another new high, but look at the divergence. Not only is it a lower high, but look at that divergence in the RSI. So the relative strength was not there, which is why it got rejected. The follow-through was sorely lacking. That goes perfectly together with, well, what was it? Well, the final, where they needed stuff or where they wanted things to be, because that happened quickly in the morning, where it ran up and made that new high and then spent the balance of the day getting out. So what things got monetized, positions got monetized, options started coming off, everything started to now get ready for the mark for the June end of the second quarter marks, in terms of the index, in terms of the individual stocks, and that large expiration. Now, still in its infancy, I'm going to bring it down to the 4-hour chart. Still basically in its infancy, even if I kind of open this thing up, that's still the A wave coming off. But look at 4 hours, 2, boom, made the high, boom. Yes, it rallied back to get above that 50, because below would have triggered that moving average. On the 4-hour chart, would have triggered the moving average. We slid a little bit further, right? But we came off that low. The low was 55.08, I believe. 55.10. And they got it back to 55.32. Now, bring it down to the hourly chart. We can, again, look on the internals. Wow. Okay, is this 1? And this is a 2? On the hourly, we broke the 50, and we broke the 200. But look what we managed to do. So again, on the hourly and the 4-hour chart, we managed to get back above. In the 4-hour chart, it was the 50, and the 1-hour chart, it was the 200. Now, what is the hourly chart telling us? It's saying sell, strong, and technical indicators, strong, moving averages are in a sell. So put them all together, we have a strong sell. Why? Well, because we're going to be heading lower. We're heading down into that zone that I keep showing you. We're heading down into here. We got a long way to go. This is 49. Actually, it's not. This is 5085, 5085. Is that really right? Yeah, it is. Maybe what's that one? Yeah, 5027 was that low in April. And that's where we can come back to. Our low is 49.18, and that would be 382. Normal retracement for a fourth wave. And this marker is for that color, which is the color I use for the minor degree. So you can combine that and see, okay, that's that orangey color, that's minor. That's orangey, this is the support zone for that minor fourth wave. This is the fib support zone for that minor fourth wave. So looking like we should start to head lower. If you want to try to combine what the world is saying, what other people are talking about, that NVIDIA is not going to go down or Apple's not going to go down, it's like, okay, that's what you can base it on. I'm basing this opinion totally on the technical look. I'm not including fundamentals in the technical view. Okay, so you can see here, hourly chart, the RSI, boy, look at that. Divergence off of that high, which never recovered. Sort of, but did not. Look at that. That's that high. It didn't even, just like the relative strength in the market, I mean, that told you to sell it. If you're a day trader and you're just following from here on the hourly and then moving it down to a 30 to a 15 minute, you were selling this. And you were ultimately the winner. Yes, as a day trader, these were fantastic. These were good moves. This was a solid move, but you had to be there and you had to trade it at the end of the day, which I tend not to. Because it's a marking party. So again, depending on your time frame, and are you long, mid, near, very short term trader? Are you a swing trader? Are you a day trader? Are you a long-term position trader? I'm trying to include something for everybody so that we can start to make sense of using the wave count, but even just the technical picture to fit how we all trade. So I'm going to finish this right now, right here, get this posted. So the next Elliott Wave Daily will be Monday, July 1st. Can you believe that we're already 6 months done? It's going pretty fast. It is going fast. So, and so the next Elliott Wave update will be on Monday, July the 1st.